Hey everybody, welcome to the On the Block podcast, where we talk about anything related to either the cryptocurrency space or general market talk, or it could be any news that affects the markets or anything. This podcast, because it's the first one, it's going to be a little bit more of an introductory style to Bitcoin and cryptocurrency, why I'm bullish on certain cryptos, going from there. So some of the knowledge might be a little bit rudimentary or basic for some people that have been in the crypto space for a little bit longer. But as we know, everything's pumping up now. Thanksgiving just happened, so everyone's talking about crypto. So I figured I'd go ahead, make the first podcast here, and we can kind of talk about why Bitcoin is what it is, where it's going to go, and then what other cryptos could do. And then I'll talk about why I'm bullish about the whole crypto space overall. So today, obviously, we have a little bit of an uptrend, which is nice. We did see the massive upswing earlier on in the last couple of days to weeks. So that's been obviously nice to see after a very long, drawn-out bear market. So what's this tell us? A lot of analysts are saying that we're entering the new bull market cycle. So essentially everything, and this isn't Bitcoin specific, but everything goes through market cycles, especially actually more like gold. So if you look at how gold works in its market cycle, if you just Google market cycle gold, you should be able to see charts of how gold will do its certain cycles of bull, bear, and then consolidation after rallies. So Bitcoin works in a similar type of way where it has market cycles. Now, the Bitcoin market cycles are dictated by a couple of different things that we'll talk about. But obviously, you can kind of plan the trajectory of Bitcoin. So it's not completely, a shot in the dark as some people might make it out to be. So let's talk about Bitcoin, because a couple of things that come out with Bitcoin, and a lot of people talk about how it's used for illicit payments and money laundering, which when you look into cryptocurrency, unless a cryptocurrency is specifically developed for that purpose, something like Monero or Zcash, the ledgers are open. Usually with cryptos, and especially with Bitcoin, Ethereum, XRP, any of the top really 10 cryptos, I don't see one privacy coin. You can see every single transaction on the blockchain. So it's not like anything's hidden. And in fact, the FBI are going back and capturing a lot of people that did use Bitcoin thinking that it was the safe haven, which it clearly isn't. It's here for something else, some other purpose. And if you look into more like the white paper of Bitcoin and kind of research on Satoshi's vision of what the blockchain was supposed to be, you can kind of see where we're going. It's more of handing this currency or the power of finance back to the people. That can sound very vague and obscure, but if you look in the past and if you look at our current system, right now governments control the monetary supply. Well, with Bitcoin, no government controls it. Yeah, China has a 51% stake in Bitcoin, as in they control 51% of the nodes, I believe it is. I don't know how impactful that could be to the blockchain, if that's a bearish statement, definitely not a bullish statement. But I don't know if that is going to intrinsically diminish what Bitcoin is. And I believe Bitcoin is going to be an incredible store of value in the future. So let's talk about crypto before we move into Bitcoin specific. Then we'll move into some other cryptos, because I'm not a maxi. I'm not totally bullish on Bitcoin, where I'm not like I think no other crypto is going to work. That in my opinion does not exist. I only believe in a multi-blockchain world at this point. It just makes sense with the products that are coming out, and I'll explain why there is room for multi-cryptocurrencies. I don't think that there needs to be one to rule them all, as some people like to make it out to be. So if you look at the market cap right now, we are at 539 billion, and you can see that up at the top at CoinGecko. You might use CoinMarketCap or CoinPaprika. I enjoy CoinGecko personally. I think I like the layout. I like the quick views, trading view. So it's just the one that I use. I don't know the many differences, but just keep that in mind. So about 540 billion right now. We did at the peak in the last 7 days hit up to 585 billion. And these numbers seem like a lot of money. Now, when we're looking at the Bitcoin market cap, and sorry about that, when we're looking at the Bitcoin market cap, we have a 24 million. I'm sorry. When we look at the market cap, not the trading volume, we have 328 billion. So it's obviously a big fraction of the actual market cap, and that can be translated because Bitcoin was the first. Kind of the first out of the gate, and it almost seemed that Satoshi, and if you look back at some of the statements and everything, I think at that point the FBI didn't want something like a decentralized currency coming out. This would be damaging to a lot of countries that didn't know how to work with it, right? Because this is effectively 10 years ago. So Satoshi released Bitcoin under a pseudonym. I suspect to maintain anonymous because often the first business or the first crypto right out of the gate usually gets shot. The first one through the door usually gets shot and put in jail. And we've seen that with a lot of cryptocurrency companies and exchanges where the first ones usually just get put in prison because of something that happened with their exchange. It's highly scrutinized because it's something that's not really regulated. Now, it's a little bit different in 2020 where we have a lot more regulations on certain cryptocurrencies. I speak from that as a Canadian. In the States, I know it's different with New York and their bit license and other regulations throughout. And I know Wyoming's pretty open with the cryptocurrency, but I know like banks are starting to be able to custody crypto. So we're moving in a direction where institutions are entering into the phase where they can jump on and custody and invest in cryptocurrency, which I think is eventually the right move, because I truly believe in a tokenized environment being where we have stocks represented as tokens instead of just stocks. And so every token is one stock effectively, and you can buy in fractional tokens just on the blockchain. So it wouldn't operate out of trusts or anything like that. It just, you'd know that you own a part of that company because it's validated by the blockchain. So overall, blockchain just makes sense. But again, back to market cap here. When you're looking at a 540 billion market cap, 330 billion for Bitcoin, these market caps are so small. And I can represent that just by giving you some of the market caps of other investment assets, right? So if you look at some of the markets now, we have our gold market. So it's estimated right now that the gold market is about 11.5 trillion, somewhere in that range, which is a lot higher than what the cryptocurrency market is in whole. So you can see cryptocurrency is literally a very small fraction of what gold is. I think the real estate market, and I could be completely off with this number, but I think the real estate market is around 30 trillion. That could be like commercial real estate. So I don't know if that like includes individual homes, but most likely includes like rental properties and stuff like that. So it could be 30 trillion. That number could be way more, but I get it. When you're talking about real estate, that's more of a hard asset, something that you're not usually selling and flipping often. Like some people do that with homes or something, but when you buy like an investment property, like a giant building with rental units, something like that, you're often holding on to and reaping the income from the actual rentals. Okay, so fine. Now let's talk about the stock market. So recently, if you look at the stock market, you can see a bunch of big names. Jeff Bezos selling a portion of his Amazon stock. Warren Buffett selling a lot of the banking stocks that he has. A lot of people are just taking a cash position. And in fact, now some people are coming out and investing in Bitcoin. And we see that with like the companies like MicroStrategies, a few others. Obviously, Grayscale's been in the game for a long while, but I think in the next bull run, we're going to see things like Bitcoin, Ethereum, and XRP, and possibly other cryptos start being added into a lot of these investment portfolios that people have. A lot of, I guess, ETFs, but I don't know how that would function in the new space. But eventually, companies just like Grayscale are going to package up cryptocurrencies and allow you to buy into them. But as much as people say cryptocurrency is a hedge against the US dollar, I do believe that it's a hedge against inflation, not necessarily the US dollar specifically, but government caused inflation. So from that aspect, sure, cryptocurrency is a little bit of a safe haven, but this is going to turn into just as big of a market, in my opinion, as the stock market. Blockchain has so many uses to individual organizations and how we currently do work, right? So if you think of how when the internet came out, we have, companies like Ask Jeeves, Google, and a few other companies in the early 2000s, at least when, I was growing up with the internet. Obviously, I grew up with like AOL dial-up days and going in to when the internet was more flushed out. So I wasn't in the old IBM days in the 80s, but I got to experience the transition from never having the internet, never really reaching out to the internet for my answers, to now I have a smartphone literally at my hip at all times, and I'm constantly connected. I can see everything. I'm connected more to the world than we ever have been. And obviously the internet has changed our lives. Some say for the worse, some say for the better, but it's changed our lives, and the genie's out of the bottle and we can't put that genie back in. That is the exact same thing with blockchain. That's why Bitcoin was launched under a pseudonym, because once the genie's out of the bottle and that technology is open source, you can't put it back in. The community is just going to run for it. So Bitcoin's here to stay. That's the point. And when you're looking at the stock market is a $77 trillion market. And with all the selling pressure and all-time highs being, propped up by the Federal Reserve just printing money, I think the $77 trillion stock market actually is probably way higher now. But I think this market is going to crash. I think we are impending a crash because the truth of the matter is, we don't have a vaccine yet for the health crisis. It is coming. It is coming, but there are a lot of logistical things with that. The temperature that it needs to be kept to, who we're going to inoculate first before others, right? So the reality is someone like me or someone like probably people watching, unless you have a serious health concern or you're a healthcare worker, you're probably going to be last to receive the vaccine. Whatever politics are with the vaccine, I'm not really discussing. This isn't really the place for political discussions about it, but I'm more talking about the impacts on the market. So for here, obviously, a vaccine would help us greater enhance the recovery. But the truth of the matter is, right now, we're already in a very dangerous place. Businesses are seriously over leveraged, and any new debt that they take on just to stay afloat or just to pay their employees is only going to prop them up for a set amount of time. So even if we delay a crash, we have these zombie companies, which is a new term that's been termed. Actually, I think it was came out in 2008 when the Fed had to go in and buy more bonds just to keep the economy from literally dumping. So we're coming up to the same point, the same kind of 2008 crisis, and we have a bunch of preemptive crises that have led us to that. One being the repo market crashing in September of 2019, and then shortly after we head into coronavirus, heading into a number of very damaging lockdowns to the economy that in some ways stifled the initial wave of the health crisis, but I think that there were other measures that could have been taken to kind of alleviate the pressures later on, and there's ways to stay open, essentially. Now, that being said, I do think that you have to stay open properly, and you have to stay open by the rules. Um, when you're discussing something like a health crisis, an H1N1, or any other um, crisis that we would have in terms of like a pandemic or anything else, we need to make sure that we're at least functioning in a safe way. And that does mean that a lot of businesses are going to have to adapt. Now, I don't think that every business can adapt. And I think that a lot of people are going to lose their jobs or already have lost their jobs. And we see that with the growing unemployment. So even though the stock market right now is at all-time highs, I could argue that the economy is just in the tubes. The economy is literally just sinking down further and further while the stock market's propped up. Now anyone in a position in the stock market is probably loving this, but a lot of smart people in the stock market right now are preparing. They're building a cash position, they're buying gold, and a lot of them are now going into cryptocurrency and buying Bitcoin. And it makes sense when you think about, how the stock market is propped up right now with printed money, Fed buying bonds and propping up the stock market and giving bailouts to specific large companies that are too big to fail, while the small companies that build up most countries like Canada, my country, or America is a good example. All of those small companies, all those small businesses, they built the country. They continue to keep the country running, regardless of whether or not, American Airlines is flying. It doesn't matter. American Airlines isn't hiring the majority of Americans. It's usually, that individual coffee shop or that bar that can't open, right? So you have a lot of issues right now with the lower classes, right? The people that make the country go, or make our world go, I should say, because I don't want to talk about one specific country over another, but make the world go, that are now entering into some of the hardest times, taking on additional debt, over leveraging themselves, and essentially just waiting it out until bankruptcy. That's where this ends, and that's what happens. So even if we don't see a crash in the near future, which I completely think that we're going to see a crash very, very soon. But even if we don't, we're most likely going to see bankruptcies just trickle down, and a lot of big names go bankrupt. And we've seen that over the years, as even after 2008, a lot of iconic names went bankrupt. And I think we're going to see the same thing trickling into 2021 as we deploy the vaccine. I think regardless of the speed of the vaccine, which is incredibly fast at this point, obviously we haven't seen a vaccine be deployed this quickly, but I still believe it's too little too late, right? Like, we didn't react at all fast enough. So here we are. And the only solution that we have at this point is to leverage our countries more into debt just to bail these businesses out, which they're the small businesses. They're what keeps us going. And yeah, so we are entering into some pretty scary times. I'm very bearish on the stock market right now. That doesn't represent my total view on the stock market. Stocks will eventually go back up. The economy will recover. We'll make it through this, but there's going to be some hard times. I don't think anything's going to really stop that or slow that. I think that's going to be, regardless of what happens, I think the world is going to go through some hard couple of years. So let's talk a little bit more about Bitcoin specifically, and discuss why it's this safe haven that everyone talks about. Why specifically Bitcoin? Why is it this thing that everyone wants to invest in? So right now, the current price of Bitcoin is 17,687. Seems high, right? It's about half the price of the Dow Jones, a little bit more. The circulating supply, so this is how many Bitcoin are available, is 18,556,000. And that's out of 21 million. So you might ask, okay, so what's this gap? Where's this extra Bitcoin that isn't here? It's essentially mined. So I'm sure you've heard this term where people mine Bitcoin. How it works is your computer solves certain problems, and that validates transactions and Bitcoin creation on the blockchain. And this takes energy. So this takes electricity. So it's not free, right? So when people say Bitcoin is essentially nothing, it's nothing represented in air. Well, that's not true. It's represented of the effort that went in to go and mine it, right? So the same sort of thing happens with gold, right? Gold is precious because it's finite. There's only a limited supply. We can never create more. We can always find more because obviously gold came from collapsing stars and exploding supernovas. So there's gold plentiful in the universe, but we have finite here because a limited amount of rocks hit the planet over time. And I'm sure there's a lot more deep down in the world because our world's really old. So there's definitely some gold. And there's definitely gold on the moon. There's definitely gold on asteroids. It just exists in the universe. But we can't create it, right? Which is why it's such a good currency for us, because we can't counterfeit gold. Now, obviously, we chipped into, like you saw, older coins and currencies started fractioning their gold and shaving off gold and replacing it with other metals, but still keeping some gold content. So everyone's like, yeah, it's fine. So that was like edging into the fiat system. And now we have our fiat system where President Nixon, for example, took the United States dollar off the gold standard. And everyone else was already off the gold standard because nobody had enough gold, right? So the whole Bretton Woods discussion was, okay, well, let's everyone back your dollar by gold, by the US dollar. And don't worry, the US dollar is backed by gold. So you don't have to worry about backing your dollar by gold. The US dollar will do it via proxy. Well, after President Nixon took the gold standard away from the US dollar, what are we backed on? We're backed on the trust of the United States dollar. And essentially, this is what happens with every currency, right? The only reason gold is a currency is because we trust it. Seashells at one point were a currency because they trusted it. Blockchain, Bitcoin, is a currency because people have trust in it. This is how currencies exist. So when you look at the trillions of dollars of federal debt that the United States is in, it can never be unpaid. Something like a debt jubilee or something like that would effectively destroy and decimate the US dollar. You're backing everyone's currency on this failing currency. And I think it's becoming more evident now than ever. So just on that stance alone, Bitcoin's a good investment. Okay. So we talk about 18.5 million supply. Now the market cap is 328 billion, right? So that's a fairly small market cap just for Bitcoin. And I'm going to pull out the calculator here just to run some numbers with you guys live. So let's say we hit a $1 trillion market cap. Now, the market cap is calculated by the price of the token times the effective supply, right? So what I'm doing is 1 trillion, 000. So missing 300. You don't realize how big 1 trillion is until you start actually going through. And let's divide that by the current supply of 18, and we'll call it 18,557,000, just to make the math, just to make it easier on me, I guess. So 18,557,000. 000. All right. So right there, $1 trillion is a 53,888 Bitcoin. Okay. So interesting. So $1 trillion seems like a lot of money. Well, we talked about the stock market being 77 trillion. We talked about a pending stock market crash. So you can imagine that most people would, at that point, leverage a cash position or go into Bitcoin and gold. So if we look at the 1 trillion divided by, let's say, 328 billion, so 328, let's say 224,000,000. Okay. Divide that. So we're talking about a 3 times increase. Right? Doesn't seem like a lot. When, let's say, hypothetically, that we are able to get a $10 trillion Bitcoin. So almost matching the market cap of gold, right? So 10 trillion divided by 18,557,00. So right there is a $5.3 million Bitcoin. Do I believe that we're getting there? I mean, eventually. I believe down the road, 20, 30 years from now. Yeah, this could be possible. I think it's realistic because right now we see Citibank and a bunch of big organizations estimating about a $318,000 Bitcoin in the near term. And if you look at the Bitcoin chart, and actually let's go here. So if you look at the Bitcoin chart, and we'll look at the max chart, so we can see the full chart going through, and we had the one incredible bull run here back in 2017. Just shocked and awed everyone. Super shocking. We could never imagine that Bitcoin has done this or could do this ever. Yet it did this before. So let's look way down here, way back in 2014. So something looks sort of similar here, right? If you look at this looked like something that could never have happened before. Bitcoin essentially almost 10 times itself, went from 107, you can call it whatever, $107, right, to basically $1,100, right? So it basically 10x itself, right? The reason why, so some people wonder, why did it 10x itself? Well, when I discuss the mining, there's this thing called the halvening. So every set amount of years, how much Bitcoin is mined is halved. So the rate of mining Bitcoin is halved every couple of years, and this goes on a cycle. And it seems to maybe have a good part to play in the overall market cycle of Bitcoin. So we can see the first halvening, right? And then up in 2014, oh, hey, that's the boom that we saw, right? And we saw the increases, we saw the all-time highs going from the lows, and we saw that happen relatively soon after the halvening. And then the second halvening happened. And at this halvening, we ended up in our all-time highs of 20,000, huge, like we could never comprehend that this could happen, but it did. It happened back in the first halvening. And then we have the third halvening right here. We just had this happening. And at that time, the price was at 12,000. Now, I was buying Bitcoin. I want to preface, I was buying Bitcoin down here somewhere in the 3,000 range. This is when I first started getting into Bitcoin. So I'm still new to the whole blockchain. I don't want you to, the whole crypto market. I don't want to say blockchain because blockchain is a technology. Crypto is an asset. But I got in fairly early, so I don't want to come off as a crypto expert or anything. I'm not a financial advisor. This isn't financial advice. I'm just explaining what I learned, so that is that. So we're at the third halvening. We just passed this a couple of months ago in the heat of the coronavirus. There was a big dip during the start of the coronavirus, so, you know, but that was stock markets. Stock markets pulled everything down, so of course everyone was taking a more cash position because fear and uncertainty and doubt, right? So everyone had FUD, everyone needed a cash position, so fair enough. Now we're getting closer to our all-time highs at about 20,000, 21,000, right? So it's estimated at the end of the market cap, we're probably going to see another upswing to all-time highs and capping that. This chart here in Trading Views estimating a $79,000 Bitcoin. So that's possible. I think with the increases that we've seen, we'll probably see more, and especially when you look at the low value of our market cap and how little money, when you compare it to the other markets, how little money actually needs to enter Bitcoin to get it into the hundreds of thousands of dollars and even $1 million Bitcoin. Do I believe at the end of this cycle we're going to see $1 million Bitcoin? No, I think we're more likely going to see an all-time high of 300,000, and then we're going to see an instant crash. Well, some people may ask, well, why would you see an instant crash? Well, if you look at the other market cycles, at the end of every major euphoric rally that we had that reached mega all-time highs and smashed records, at the end of every single one, there's a massive retracement leading into a massive bear market. And that's happened every single time where we trade level or down. and everyone comes out with all their FUD saying Bitcoin's dead, it's never coming back, it's all gone, your money's gone, it's all based on nothing, it's backed on nothing, it's fake fairy money. It's not true. At the end of the day, it will just continue cycling. Bitcoin, there can never be more Bitcoin made in existence than the 21 million. You can't inflate Bitcoin when you have a crisis, when you can't pay for certain things. You can't just print more money to do it. This is a true and probably the only store of value that we see and that we will see. So just keep that in mind. Halvening chart, it's a good thing to look into, and just the halvening in general. I'm giving you the basics of the halvening, but it does seem to kind of dictate when the market cycles are happening. But I guess we'll see that once all halvenings are done, which is, I believe, in the 2100s. So I won't see it, but the future generations will. So there you go. So let's talk about some other cryptos. So I'm pretty bullish on Bitcoin, so we see that. But like, what about these other cryptocurrencies, these other projects that are here? So let's take a look at some of the most popular projects. So we'll look at Ethereum. Definitely in the number 2 to Bitcoin. Has about a 61 billion market cap. If you guys don't know, I have Brave, right? I have the Brave browser, so I'll show you, because you see a couple of pop-ups and I get BAT every time I see an ad and I interact with an ad, whether I close it or I click on it. So here, obviously, you can see I have 5 BAT. So I passively just collect BAT with Brave. So if you're interested, it's just like Chrome. I love it. Get Brave. It's just a nice browser. So you look at the current price of 543 Ethereum, and you think, well, that's cheap. And then you look at the circulating supply, and you see it's 113 million. Oh, well, that's a lot higher than what Bitcoin is, because Bitcoin's only at 18,500. So you start thinking, okay, that's a little concerning. And then you look at this symbol, and if you don't know what that is, that's an infinity symbol. Essentially, we can just keep making Ethereum. Ethereum never goes away. Now, that being said, it does need to be mined, right? It needs to be mined with GPU mining. So this is why, if you're a PC gamer like me, you hate Ethereum, because it's completely decimated the graphics card market. So now you can't get a graphics card because all the bots are buying it, because they're all mining Ethereum. Now, okay, so let's talk about Ethereum, right? Seems weird. Infinity, we're talking about like assets that can't be inflated. Why would I want to get into an asset that can basically just be printed to infinity? Well, there's a rate of printing, right? There's a rate of how many problems these computers can solve, and then pump out new Ethereum into the system. Plus, other tokens are built on Ethereum. So anytime they build their tokens on Ethereum, they take that Ethereum effectively out of the network. So there's constantly tokens coming in and tokens going out. It's kind of a symbiotic relationship there. But also the fact of the other things that Ethereum provides. So Ethereum, the currency, is what it is. It will appreciate in value, obviously, but it has a big use case to it. So it's entered this whole decentralized finance movement. And to best explain decentralized finance, think of what your bank does with your money when you put $1,000 in the bank account. Now, they're not giving you any money, but they're taking that $1,000 and they're loaning it out to other people, either individual loans or institutions, maybe margin trading, whatever it can be. Now, when decentralized finance essentially is taking all those things, putting it in your responsibility so you can make the same gains that your bank makes on your money and just doesn't pay you for, right? So it's making your money work for you and not the bank that is just holding your fiat, and then your fiat is losing value due to the inflation rate. So every year you lose 2% of value of your of your money, effectively. Any cash position that you have that's not in assets. So something to keep in mind. So Ethereum has this essentially enables DeFi platforms to start working, and you start seeing like platforms like Uniswap, decentralized exchange come out and everything. And a lot of this can be confusing, but for DeFi specifically, I would say for anyone new to investing, they don't need to step into DeFi yet. You will eventually. Getting into crypto, you're going to eventually make your way into some DeFi platforms, whether you go to just like a simple lending platform that is able to pay you interest on your crypto, or actually providing liquidity within a decentralized exchange, which is like giving your money essentially for people to trade with, and then you make the fees on it instead of the bank that would usually provide the money. So it works like that. Think of it more as like a peer-to-peer monetary system rather than a centralized bank monetary system, right? So now instead of the banks lending out our money and making money on our money and not paying us anything, now we're doing all those things that the banks used to do. So that's sort of what Ethereum allows. Now, Ethereum also provides smart contracts and a bunch of other things that, might seem like buzzwords, but really they're not. They're just ways to confirm that, something's been accepted or approved. And so there's a lot of use cases that stem from something like Ethereum. Now, I don't claim to be an expert at Ethereum, but I am bullish on Ethereum's long-term prospects. I think right now, in terms of Ethereum, it's definitely undervalued. I truly believe in a much higher Ethereum. I almost feel like Ethereum should be at Bitcoin's numbers and Bitcoin should be soaring. I personally hold Ethereum. I like Ethereum. I like the project. I like the team with it. And ETH 2.0 is about to launch. They just met the staking requirements. So we're waiting to see that. But we could see a pretty bullish uptick in a nice swing up. Of course, the all-time high, I think, is 1,500, I think. Just shy of 1,500. So, all right. So we've talked about Ethereum and how it brings other financial aspects to the crypto space and everything. So something that I'm particularly bullish on is XRP. Now, I could have instantly a bunch of people just click right off of this podcast right now and just get out because they hate XRP. Now, a lot of people hate XRP, and there's a couple of reasons for that. And I'm going to go over the FUD reasons first before I talk about why XRP, I think, is actually going to be a commanding cryptocurrency in the future. So the FUD, let's first take the circulating supply. So we have a much higher number of 45 billion in current supply. And the total supply of XRP is 100 billion. So when XRP was created, 100 billion XRP tokens was just created into existence. So no mining, no energy to use it. It's just there, printed out, but according to the contract, can never be printed more. Like the smart contract, the system can never make more XRP. So you can't create more XRP. Now, what happened at the genesis of XRP, or OpenCoin back in the day, developed by David Chaum, Jeb McCaleb. I think David Schwartz came in a little after that. Vitalik Buterin, I know, worked with Ripple for a little bit before going on to building Ethereum. So a lot of big players had their hands in XRP creation, and XRP is almost as old as Bitcoin. And even if you look into some of the white papers and everything, there's talks about XRP even before Bitcoin was released. Now, I'm not putting on a conspiracy hat or anything, but I do believe that the Genesis cryptos, the few cryptos that came out early on, were probably created by the same people. Probably created by the same group that labels themselves as Satoshi Nakamoto. But Satoshi is a whole nother topic for a whole nother podcast. I'm pretty convinced I know who Satoshi is, but not in this one. That's got to be a special. Okay, so Ripple has an escrow, and now Ripple is an American-based company. They're thinking of relocating due to regulation issues in the U.S., but currently a U.S. company that has an escrow of the remaining, the rest of this 100 billion, right? So we have 45 billion in circulating supply, and then there's a bunch of others. Now it's locked up in an escrow, and 1 billion is released in a certain period of time. So it almost represents how mining works with Bitcoin, where it just releases it and then it's sold off into the ecosystem, providing liquidity into the system, and going through. So essentially, Ripple sells off coins of XRP every time they're coming back from the escrow or being released, and that escrow is going to release until there's no more. Now, let's talk about that, because that seems pretty like pump and dump schemish, right? Well, not exactly. Ripple is a company that, one, has the best interests of crypto in mind, has the best interests of American economy in mind, especially with some of the things that Brad Garlinghouse has been saying about China and the control that they have over Bitcoin. There is a lot of aspects to Ripple that makes them a reputable company. They're a multi-billion-dollar company. They haven't IPO'd yet, but if they do IPO, I plan to invest on them because I view them almost to the same capacity as people viewed Google back when Google was launched. Now, Google was a small indie company, ragtag team that built this incredible software that solved a problem that we didn't even know we had. And that is what Ripple does with XRP. Now, I want to make the distinction here. There are two different things that we're talking about. Ripple, the company, XRP, the cryptocurrency. Well, the main heads of Ripple had their hands in creating XRP before Ripple was a company. Ripple essentially manages the incoming escrow, so any funds that come in, and they can opt depending on what the current climate is. And they have done this before, where they see that there's no use to put the XRP into circulation. It's not going to help liquidity. It's not going to help any developers. We have adequate liquidity. So what they'll do is they'll go back and tack that on to the end of the escrow. So that will come back later, and then they can decide. So that's up to the discretion of the board, and the board decides whether or not they're going to essentially where to distribute the new XRP that comes into the ecosystem. So they're spreading it out to provide liquidity. So, okay, and I know that seems a little weird, and you can kind of think, okay, well, Ripple sounds a little like a security, almost like a stock price, XRP sounds a little like a security, almost like a stock price to Ripple, when it's not. And we see that with other teams building on the XRP ledger. XRP is completely agnostic of any company, and in fact, there was a recent ledger change that was being voted on. I can't remember exactly what it is. I think it was something having to do with open sourcing the technology. And what had happened is the ledger community essentially voted against what Ripple wanted. And Ripple lost, because the truth of the matter is Ripple doesn't control XRP, and XRP isn't based on Ripple's price. What Ripple, the company, will do, will that increase XRP's price? Yeah, for sure. That makes sense. The more companies using a cryptocurrency, that's going to increase the cryptocurrency's price. That makes sense. Those two things are correlated, right? Just like other teams building on XRP ledger, right? So Flare, or if you look at other cryptocurrencies like Ethereum, well, like if a company picked up Ethereum, that's going to increase the price. PayPal just recently is allowed to sell Bitcoin and Ethereum. And that's brought effectively millions of new retail investors into the space. Just there increases the price. Well, would you say, oh, Bitcoin's a security because it's correlated with PayPal's price? No, it's correlated with the use, how many people are using it. So in turn, it's correlated by how many people trust it, right? So going back to that trust, now more people trust the currency is going to be valued for more, right? And that's, if you take anything from this whole podcast, that's what the cryptocurrency market's here for, right? And that's what bases all currencies. That's what makes all currencies worth something, right? The fact that a piece of metal is not useful at all in your life. You can't do anything with that piece of metal. You can't eat it. You can't have shelter with it. Well, here you can, because that metal is used as a currency. But if it was just its own metal, just gold, you can't do anything with that gold other than maybe make circuit boards. Other than that, there's nothing that you can like do that's going to make that value of gold bigger. The reason why gold value increases is because more people use it and more people trust it, and that's how currency is built on trust. That's Humans are weird things, and if you look at markets are emotional because it's based on human interaction, and we're very, very weird. We're very emotional, and if we see a price go down, we think, the sky is falling, this is a shit coin and it's not going anywhere. Well, realistically, that's not true. So let's talk about some of the other FUD that we see. A lot of people will say that, XRP hit its all-time high, and then it went trading back to like what it was trading before. So it was trading at about 20 cents, 23 cents, hit its all-time high of $3, and then continued trading sideways. So therefore, Bitcoin is a better asset because it didn't do this. Well, that's not true, because Bitcoin kind of did this. And especially if you look at the max, hold on, we'll go back here for a second. Especially if you look, Bitcoin kind of went down, and then it kind of traded sideways below the 20K. Sure, it didn't go as low as the 1K that it went before, but it still traded sideways, okay? So if we look at XRP, fair enough. You know what? I will give you that. The asset went down, right? Didn't hold up to its all-time highs. It just traded sideways, did nothing. But if you had bought the dips, right? If you bought these low points, even if you bought at 30 cents or whatever, and then you bought like at 18 cents down here, and then you're buying again at 23 cents, and then everything here, anything above 23 cents. And I know this out of experience because my average purchase price for XRP is about 23 cents, and I just started 24 cents, I believe it is. That you're in profit. You're in profit, and I personally am in profit 130%. I'm in profit also on Bitcoin 80%. So if you're telling me that XRP doesn't have good performance, well, yeah, it doesn't until it does, and then it does. And that happened, and we can see it happen. And if we look at how the chart worked before, happened exactly the same in the bull run, right? It does until it doesn't, right? So it just like stayed at its stable 20, or even before that fraction of a cent, stayed very stable, and then just shot up, right? And so it all of a sudden just went up. It's all of a sudden a great asset, and then goes back down, right? This big bearish time. Oh, XRP's gone, gone, and then boom, goes right back up. Now, I can't tell you that these spikes here, and even this spike here, I can't tell you that these spikes are based on utility, because they're frankly not. Everything right now is all speculative, just like 2017. We're not in the utility phase. We are still in the baby steps of the crypto market, of blockchain, just like how we entered the internet. Now, there's a lot of other companies that and projects that you can look into, and some that I recommend is Polkadot, Stellar, Cardano. And there's a lot of projects here that are doing revolutionary things with cryptocurrency. So there's definitely some room here for crypto markets to grow, and you start to recognize, okay, well, BTC is good, but BTC has high fees. It takes about 40 minutes to a couple hours, depending on how clogged the network is, to transfer Bitcoin. So when you're at a grocery store, for example, you can't sit there and wait 2 hours for the payment to go through. You need to make sure the payment's instant, right? Okay, well, Ethereum kind of solves this problem with cheaper fees and goes down to relatively quick speeds. I close Ethereum transfers. So if I send Ethereum from one address to another, I usually close those sends in about 15 minutes or so, depending on how clogged the network is. I've seen it as long as 40, and then it depends on how much gas you want to pay if you're using a DEX, and that's a whole nother deal and a whole nother side of fees, and Ethereum 2.0 is apparently going to bring those fees down. if you look at XRP, and this is one of the main reasons why I'm so bullish on XRP, XRP settles in 1 to 4 seconds or 2 to 4 seconds. That's it. There's no cliff note. The only way that XRP is slowed down is if I send it from an exchange like Kraken that I use to another wallet. Kraken takes its own time just to validate that I'm making this transaction. It's actually me. And then after that, once it's on XRP to move from one wallet to the other, that's settled in a matter of seconds. Okay, great, matter of seconds. Well, what about the fee? Well, every time XRP is transferred, and usually with Ethereum and Bitcoin, the fees are paid to the miners. With XRP, there's no fee paid to the miner, and it's a fraction. It's a 0.02 XRP per transfer, I believe, or a super small percent of XRP is actually burnt. And what happens is essentially you send it, and then it charges this minor fee, very, very small, matter of cents, if not fraction of a cent. And then that just goes away. It's gone. It's never coming back in circulation, which means that XRP, in essence, is deflationary, right? Whereas Bitcoin and Ethereum, Bitcoin specifically, you can't make more Bitcoin than the 21 million. But XRP, it's always going to go low, right? It's always going to go down. You can say the same thing for BTC because, the millions of BTC that people lost in wallets and everything. But XRP definitely has its own properties that helps it out. All right, so I'm really hoping that gives you a good representation of why I'm bullish for XRP. In future podcasts, I really hope to bring in individual projects and really deep dive into individual projects or specific points in the news, or have a guest on and talk to them. Talk about maybe either if they're representing a project or if they're just someone that is passionate about Bitcoin. And I'm more than happy if there's anyone out there that wants to connect and hop on and have a discussion or disagrees with anything that I have to say about XRP, or even just wants a powwow for an hour on this podcast, just to let me know. Go ahead and contact just either in the comments below or hit me up on the website. Either way, however you're accessing this podcast, just reach out to me either via comment, and I'll connect with you and we will try to get something going. So I wanted to quickly, and sorry, I have a couple of things open. I wanted to just discuss quickly about Spark. So first and foremost, if you are an XRP holder like me, then you might know that there's going to be a Spark airdrop. So Spark is this new token that Flare is creating that essentially works on the XRP ledger, is essentially built on the XRP ledger. So it's a soft fork, just like Bitcoin Cash is a hard fork for Bitcoin, except XRP and FXRP will work together symbiotically. So there's a couple of things that you need to know, and this is a basic decision tree on how to claim your XRP. If you haven't already set this up, you still have time until December 12th is the snapshot, or December 11th, depending on your time zone. So please double check that and make sure that you're on the correct time zone. I wouldn't recommend moving your XRP just for the snapshot and then moving it back. Like, I don't like that. I personally am using some platforms and multiple platforms that will just deposit my Spark. Once I have the snapshot, after that snapshot, I'll move a portion of my XRP back onto cold storage, but I will always have XRP out there and other cryptos out there on other projects or other platforms just to generate an income, create XRP coming in as interest, or BTC as interest, or anything. So a couple of things that you need to know. First thing is your XRP on an exchange. So you either have something like this, a Ledger Nano, or you custody your own crypto on your phone through Atomic Wallet or Zum or something like that. Or you have your XRP on a service like Binance, Kraken, Celsius, whatever. So is your XRP on an exchange? Well, okay. So for example, I have XRP both on my ledger, and my ledger is set up for the Flare airdrop. So have some in cold storage. So let's go down that decision tree. So we're saying, is my XRP on an exchange? Well, no, it's not. It's on my ledger. Does the XRP wallet support the claim? The ledger specifically, yes, it does. So I can go through and use the XRP toolkit following the WITS instructions. I believe Coil has that article. I'm not quite sure. You can find it. Actually, I believe it might be here. Yeah, okay. So you might have all of this here, and this is just from the website. But what I'll do is I'll link this down in the description below. That way you can go through, if you haven't done this yet, you can go through and just confirm that you're all set up. So let's say I didn't have a ledger and I had some other wallet that that doesn't support the claim. So do you want to risk exporting your keys? So you can hit yes or no. So no, move your XRP to a wallet that supports the claim process, right? So you can choose a wallet or exchange. If you are willing to export your keys, then at that point you can export this here. So I don't know the steps to get through. I have no idea. I wouldn't risk any of this personally. I'm not like super savvy and sending out my private keys to anywhere. But hey, if you want to go down that route, that's whatever. So make it easy. Use a tool. Get it on your ledger. That's probably the safest way that you can claim it. Now, you can't custody on it, the ledger, yet. I don't know if there's plans. But there's going to be ways that you can claim that Spark that was on your ledger, or from the XRP on your ledger, and then custody in a wallet that does allow you to custody. And I'm sure they're going to make an app for the ledger. So to say that you can't custody on the ledger is ridiculous. I'm sure you will be able to when the token is live. So with exchanges, are you on exchange? Yes. Is your exchange supporting the exchange? And well, yeah, on multiple of mine, yes. Now, let me talk about this, because essentially 1-to-1 Spark is given. So if I have 1,000 XRP, I'm getting 1,000 Spark. So what's to stop an exchange from giving me all my Spark? Like, just keeping a little off the top, you know what I mean? Just giving it off the top. You got to make their profits. Well, Flare, and this is why I already am really happy with the company, Flare themselves is refusing to work with exchanges that don't want to follow their distribution rules of the airdrop. So everyone will get a 1-to-1 or more of Spark, and that is equal no matter what exchange you're using, right? So the only thing that you have to worry about with your exchanges are like risks like hacking or any other security risks that are to your specific exchange. Now, obviously, every exchange might have some security risks. That's why you should never put all your eggs in one basket. Spread out your assets into multiple different exchanges and custody services if you're using those, or ledgers, and not even just one. If you have a lot of crypto right now, I probably don't have a lot to put on multiple different ledgers, but if you have like a lot of crypto, why keep it on one? What happens if the one gets destroyed and for whatever reason you lost the security phrase? At least you have some money, right? So don't ever put your eggs in one basket, because you got to expect the unexpected here. So if you're on a supporting exchange, you can at least have faith that Flare's done their due diligence to make sure that they're going to honor the airdrop. And then if it doesn't support, so this is where a lot of people are looking for other products to go to. So if it doesn't, move your XRP to a supporting exchange, or if it does, if you want to self-custody it, you can move your ledger, your information to a ledger or a comparable wallet. And that needs to be done before December 12th. My best advice would be to locate a couple of different services. Now, below in the description, and I'm always going to have this, is going to be a referral code for Celsius Network. has a 3.61 APY on your XRP, so it pays you 3.61% annually, and your interest pays are paid out every Monday of every week. So you'll get a weekly interest of your XRP at a 3.61% APY. And I don't have a referral code for Nexo, but I will include a link to Nexo because I'm moving a significant portion of XRP onto their platform as well, and they're providing a 5% APY, so considerably higher, and their interest is paid out daily. I'm bullish on both platforms. I like both platforms. The thing that I like about Nexo, and the reason why I'm moving the bulk of my XRP that's not on ledgers to Nexo, is mainly because they seem more focused on the XRP community as a whole, where it seems like Celsius not so much. But that being said, I'm still very bullish on Celsius as a platform. I think it's going to one day be as big as something like PayPal. I think it's going to be very common for people to have a wallet like Celsius or from another company that provides a similar service to Celsius. So I'm still very bullish on the company, and it still has a portion of my portfolio on there, and I don't think that'll ever change. So. Oh, and 40% off Black Friday on Legend. See Brave coming in clutch. You'll never see a price like that. 40% off. So go check it out. Get yourself a Ledger Nano X. I actually plan to get myself an X as well. Just because I have an S, I'd like an X because it can hold more cryptos. And I now see myself throwing little bits of money to, projects out of just seeing what happens. If you think back in the internet boom, a lot of companies just boomed just because .com, right? So we could see a similar thing here. Now, I'm not saying that all of them are long-term buys or long-term holds, and a lot of the projects out there are scams. So you do have to do your research and do your due diligence, but you can find some really good projects even now, and I don't think that's ever going to end. So I still consider this a very, very healthy and start to a very a profitable market in the future. So the distribution of Spark, discussing that, and if I haven't mentioned, Spark essentially brings the DeFi capabilities that Ethereum has in smart contracts to the XRP ledger. So Spark could be something that revolutionizes the budding industry of DeFi. So that's something to keep in mind. It could actually be worth something. I suspect it's going to be worth like a fraction of a cent when it first comes out, but you never know. So when will you receive it? So essentially, they're staggering the Spark launch. And if you saw other tokens come out, so you see Comp and how tokens like that works out. What they'll do is they'll start out with their circulating supply, and then they budget out the coins depending on the project health and funding support, research and development, whatever they're allocating their funds for. And then they set some up for like individual exchanges, and some of them give away a portion of the supply when they first launch. And often what happens is people just dump it, and usually the creators of that project also kind of sells off a little bit of their coins so they can reap some of the higher prices before the initial decline of everyone selling and hurting the project right from the get-go. What Flare's doing is they're taking a different approach. So they're deploying 15% of the total Spark that you're eligible for. So if you have 1,000 XRP, you're eligible for 1,000 Spark. So 15% is 150. The remaining Spark will be claimable over a minimum of 25 months and a maximum of 34 months. So, for example, if you have 1,000 Spark claimable, 4% is picked up every month by the FTSO. So you'll receive 15% on the first day. So Spark at day one. So you'll get 150 Spark out of 1,000. So that math goes whatever. If you want to check compared to what you have, how much you're getting on day one, enter your total times 0.15, and then you'll see how much spark essentially you're going to get on day one. And then at that point, your value, so whatever spark, your total spark you had, minus the value that you came out of once you did this equation. So just to help you along, and you can do the math with me, let's say we have 20,000 spark collectively, and we want to times that by 0.15, right? So that's 15%. So 3,000 spark is what we can expect on day one. So this equation is 20,000, right? So our initial value minus the 3,000 that we're getting on day one. So now we have 17,000. And at that point, we are timesing that by 4%. And that's going to show us how much we're getting each and every month afterwards. So times 0.04, right? So 4%. So 680, right? So we can expect 680 every month. That kind of sucks, right? Seems like, all this free money that we're getting, we can't spend it. We can't use it. We can't sell it, right? We can't make money on it, right? You're only going to get the small amount. What is, 680 tokens at a fraction of a cent? Well, that's kind of the point, right? The whole point is to stop the pump and dumps. We have a legitimate service here that really could benefit people just by hodling a little bit. And I would suspect that most of the XRP wallets right now, other than any XRP wallets that are on exchanges or people exchanging or day trading XRP, I would suspect that most people in the XRP community are hardcore hodlers just like me. So, is this good? Is this good for the ecosystem? I think this is amazing for the ecosystem. I think it's great for what Flare wants to do in terms of decentralized finance and releasing very, very low fee and fast dexes that will outpace anything that Ethereum can even do in the foreseeable future, just because of how the technology works. Now, I'm not saying that Flare is going to destroy Ethereum. I'm not saying that at all. I think Ethereum is a superpower in its own right. But I do think that Flare in the future is going to be worth a significant sum of money. If not the same, could be more than XRP. So I'm very bullish on the project. I really like the project. Ripple really likes the project. It's been well received in the XRP community, and there's something about projects for me, and you can hear about like how I talk about Nexo and everything else. There's something about the projects for me that really support the projects that I like, right? And I've looked a lot into XRP, and I know there's a lot of FUD, uncertainty, and doubt about XRP. I feel like XRP is the token that everyone loves to hate. But the reality is, I really do feel that XRP is going somewhere with the very fast transfer speeds, the very low payments, and just being able to handle large sums of money transferring across the globe. I don't think that we'll see XRP as the world reserve currency. I highly doubt that's ever going to happen. But we are going to see XRP be the oil that moves value from one place to the other, right? And it helps exchange things like Bitcoin without the fees, right? So I do think XRP and Flare are going to be big in the coming ecosystem. So it's something to keep in mind of. But if you want to be safe, and just to wrap up this podcast, because we've been going through, if you want to be safe, obviously, Bitcoin is probably your best bet. I would recommend, if you are getting into Bitcoin, that you learn. You learn a lot about Bitcoin. You learn a lot about why it came to be and how it works and how things about Bitcoin work. How did this Bitcoin Cash fork happen? Well, what is that, right? And then what do people think about Bitcoin Cash? So there's a lot of interesting projects that you need to be aware of. But I wouldn't say anything like the market's scary or anything. I would say if you want to just make sure that you have a spread of Bitcoin, choose a number, a portion of your portfolio that you want to put in. And if you don't have a portfolio, if you're like me and then you started saving very late in your life, and I say late in my life, I'm only 30, so I have plenty of time to go. But if you are starting and you don't have any capital, I would recommend that you put at least a portion of your paycheck. Every time you get paid, put it into Bitcoin. And this is the one thing, and I want to end each podcast with this phrase: the most important advice you will ever get in terms of investing and finance. Just buy it and close your eyes. Okay? That's it for me. This is episode 1 of On the Block podcast. Go ahead and give me a like, subscribe to the video. Check out the website down in the link that I have. I'm trying to build out the Onyx Block brand. We're not only going to have podcasts, I'm also going to be coming out with individual videos. We'll do deep dives about specific projects. But if there's something that you specifically want me to research and look into, go ahead and drop a comment below. Let me know what that is, and I will go ahead and take a look and make a video about it if it's something that I see that I want to make a video about. Now, keep in mind that if I find a project that's a scam, I'm not shy about saying that it's a scam. So I'm going to tell you if something's just a pump it up. That's it for me, guys. Again, go ahead and subscribe to the channel. And thank you so much for watching episode 1 of On the Block podcast.